afternoon, everybody. Steve here from theturtlefollower.com with your strategy session for September 9th. Today was Apple Day, and Apple seemed to dictate the action in the afternoon session. At one point, it was much higher, and then it ended up closing basically unchanged. But I think a lot of the sell-the news also affected the rest of the market. When you look at the S&P 500 futures, though, as bad as the sell-off seemed, if you look at over here on the right in that last consolidation box we've drawn, we essentially bounced off of these of the support of that box, right? And at one point, it looked like we were possibly breaking down through it, and again, we closed right back. Not that we're back in the middle of the range, but we are still in that consolidation range. All right. So let's see what happens tomorrow. Let's see if we can get another continuation down. Maybe we start testing this 50-day moving average and, maybe put in a bigger consolidation where we consolidate between 2000 and, let's say, 1970 or something along those lines. Or if we continue to stay within this box between 2010 and 1985. NQs, they were dictated a little bit more by Apple than the S&P. But again, still right within that box, marching sideways to meet that trend line. And the Dow really just still within the box. So as you can see, you have to put things in context. As bad as everything was today, the market's kind of held up well. So I wouldn't be, running for the exits yet if you were trading based off market sentiment. But, we start breaking these levels here and then start breaking again the 50-day moving averages on these indices, then I think it's a little bit of a cause for concern, and maybe you want to tighten up some stops and step aside. As far as our positions go, obviously we have Apple we'll get to in a minute, but H&R Block, we discussed this coming back down, testing and bouncing off this support area. That's exactly what it did today. So now we've established pretty confidently that our support of $32 should hold. If it doesn't, then we will exit the position. Okay, we'll take our loss and we'll move on. But looking at it right now, it's held here multiple times. Actually, it hasn't closed below this level, this 32 level, since before it gapped up. Okay, so even here, that was the close. That's what we're using right now. And these two bars here, even though it did open below, it did close above the 32 level. So let's see what happens. Again, close below 32 and we are exiting the trade. General Dynamics, moved higher today. Really, I think the next stop level, like we said, is it's going to be this 122.50. But let's wait for that 50-day moving average to catch up. Nothing to do in General Dynamics. LUV bounced higher during the day, closed basically at the bottom of the range, but still marching higher, riding this upper channel trend line from on the weekly chart. So right now we did move our stop to this $29 level. Okay, we're gonna move. I think we can at this point move to, let's say, 29. All right, and we'll lock in some gains. And I think at that point now we got to break below the 50-day moving average. I do think that this trend line, while it is right now the primary trend line, I do feel that we are going to potentially, if we came back, we would put in a low up here and be able to draw a more accelerated trend there. RSG really just moving sideways. Again, talking about this last few days, but moving sideways into trend line, into the 50-day moving average. It's a good setup for longer term action. ADM down 0.14, really just at the top of the range, nothing to do there. And finally, Apple. So Apple basically today did everything that we wanted it to in the morning. After the announcement, it did everything we didn't want it to. And at the end of the day, basically closed down 37 cents. So you can see the range here on Apple for today. All right, it was as high as 103.08 and as low as 96.14. So almost was that 96.14, 103, $7. Okay, a $7 range on a $90 stock. So it moved almost 10% between the high and the low. That's a huge range. It's a lot of volatility. But what happened? It closed above the 50-day moving average. It closed above the trend line. And yes, I mean, would I have much rather it closed up here at 102? Absolutely. But the difference right now is, we're still using this 94.29 as our stop. If we can start breaking and closing in the, say, $100 level, we're going to go ahead and adjust our stop now to 97.75, but that's only when it starts trading above $100. For right now, while we're going to leave our stop where it is, potentially you could use this 96.08 as a stop based on the volatility that we had today. I don't usually like to use the tails, especially from a big day like today. But, we talked about this yesterday. Usually what happens with Apple when they announce these products is it goes and, it's up before and then it closes down after the announcement. It's always a sell the news type of event. And that's what happened today with Apple. So I'm not reading much into it until it starts to break the 50-day moving average. And then eventually, if it breaks 94.29, then I think, we would have to exit the position. From another standpoint, I'm an Apple guy. I'm a tech guy. I have iPhones, iPads, Macs. I think what they announced today was great. I think it's a great line that they're going on. A great, business model. The thing that I think got a lot of people and definitely got me was the price of the iWatch. $350 for me is crazy because you have to have the phone and the watch. If it was just that you could only have the watch, then it's a different story. So I think that may have been the trigger point that caused the sell-off. But no matter what it is, we're still looking at price action, and we're waiting for either a resumption higher of the trend, or we're waiting for that trend to break, and then we will exit the position. All right, next one is EQR. I mean, really, it tried to break out from this little consolidation yesterday, came back, tested the top of that consolidation. We're still well above the trend line, well above the 50-day moving average. Stop is down here at 64.08. Next stop level is going to be 65.80. And, obviously we would have to wait until the 50-day moving average is exceeding that level. So if you guys haven't seen the video from this morning, I talked about a couple things that I do to personally manage my stops and a couple criteria I look at. So I definitely recommend you take a look at that Trade School video from this morning, and that'll help you with identifying these stop levels. AMT down 0.81%, really just still in the middle of the box. $100 is providing significant resistance at this point, which is to be expected. But look at what's happened over the last week or two. As the stock has gone sideways, the 50-day moving average continues to move higher, and I think eventually that is going to provide a good support for the next move and breakout over $100. Disney down 1.06%. Okay, this one we're starting to break the bottom of this box. That's fine. That's why we don't set stops so tight. Our stop is down here, 87.30. We moved it yesterday, and that puts it below the 50-day and the trend line. And I think maybe Disney now either walks itself sideways or comes back, rolls over a little bit, tests like say 88.50, and then maybe bounces higher. But for right now, we're in good condition. We've raised our stop to essentially break even. We would lose a little bit on the trade, but I think the setup looking at from this point going forward, I think that would be what I would expect, is to kind of maybe roll over, come back, test that 88.50, and then eventually bounce higher and break out over that $90 level and go to 100. Fidelity, this one we talked about again, yesterday with this reversal signal here, and today we got the follow through. All right, so you definitely, we don't trade off one-day patterns or anything like that, but I like to look at these reversal signals, and when they follow through, it's nice to see and nice to be able to identify when you would get a pullback. But we talked about this reversal signal yesterday being that we closed higher. We moved higher and ended up closing below where we opened, so we had a red bar, and then today we got continuation downward. Here's the accelerated trend line. Our stop right now is still down here. We actually did move it, I think, to 56.40. I don't know why that line's not there. We did move it up to 56.40, and that uses this low here, and that puts us below puts us right at the 50-day moving average. So another couple days, that 50-day moving average will also be above that level, and I think that's a good spot to use based off of that recent pullback and bounce off of the 50-day. So there we are, and we're going to make this gray just to show the progression of the stops. All right, so 56.40, and again, a couple days that 50-day moving average will be above that, and then we will also be right at that trend line support. APD down 1.42%. All right, so here's what we talked about yesterday. Now, I went back and looked at it again last night, and I kind of made the same mistake I did on WIN. And that's why we learn from these mistakes that we make. But let's take that small trend line out and put this longer term trend line in. Let's see where we are now. All right, we are basically right at a longer term support level. So even though I said we were moving into 131 yesterday, I'm going to take that out and I'm going to set it back here at the previous stop that we had at 128.65. And that basically puts us that we're definitely breaking. We already broke this low. We broke the 50-day, but we're right at support on this trend line. So I think if we break 128.65, then it's a definite that we're out. But again, looking back at the trade we had in WIN and where we stopped out, and then realizing that I missed a trend line, I did the same thing with APD, and realized that the longer term trend is still technically intact, barely. And if that's the case, we would still be in this trade. So 128.65 is our new old stop. All right, next one is Expedia, down 2.09% today. So Expedia, we essentially are coming back, testing this breakout level, this 85.60, and I think getting to the point where we are possibly or most likely going to test this trend line and then potentially test the 50-day moving average. Our stop is still 82.50. Let's see what happens in the next few days. If we come back down, test and bounce, then we'll be able to move our stop up. But right now it looks like this topping tail here, and it looks like we had some continuation. We are now testing the bottom of this small consolidation, which we can extend up a little bit, something more like that. And I think now if we go in, and like I said, we can either move sideways from here or potentially move down and test that trend line. And the final one, down 2.53%, Tesoro. Again, yesterday we had a nice little doji that signaled potential reversal after the move higher. Sure enough, we got that reversal today, basically back testing the 64.83 level, which was the previous breakout level. And let's see what happens. We were able to move our stop to 61.70. The next level I would want to move to would be 63.70, which would be right here. But we would again be waiting for the 50-day moving average to continue its trek higher, and we would need to see the Tesoro either move sideways or higher from here. As far as our watch list, the only stock that we had up in our watch list today was ABT, up 0.05%, so that's really nothing, a no-go there. So that's really it for tonight, guys. We're really just in a holding pattern here. I think we need to wait for some kind of confirmation between that range in the markets, either a breakout higher or lower. We're close to a couple of stops, specifically APD and Fidelity, I think, was the other one that we were close to. Nope. One of them, EQR, I forget. That's a nice thing about having a lot of positions, is you don't really have to worry about one and fixate on one. Anyway, there are a couple positions we're close to being stopped out in. Oh, I'm sorry, H&R Block, that was it. H&R Block, APD, those are the two that we're closest to getting stopped out. If we do, we take the exit and we move on. Fact is, there are plenty of other stocks right now that are working, and even now, just looking at this H&R Block trade, if you were to use these lows down in here, we technically are above the trend line, but I think we're going to keep the trend line the way we had it drawn, something more like that. So we definitely broke that trend line. We're coming down testing. I think that's fine. But like I said, if we get stopped out, we get stopped out. That's part of the game. But the intention is you keep your losers small, let your winners run. So as you can see in the model portfolio, we are essentially showing only losers. I think we've had, out of the closed trades, I think we've had 1 out of 5 as a winner. And that's fine. That's the intention. A lot of small losers, and let the big winners run. Let them pay for the losers, and you'll be successful in the end of the day. So please follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel, and we'll see you tomorrow with the with the stock trade idea for this week. All right. Have a great day, guys.